Joining me now to discuss all of this, Liz McDonald, Shaw Galani, Todd Horowitz. Well, we're going to have to start with Apple and that huge cash pile, $257 billion. What are they going to do with all that money, Todd?
Morning, Charles.
Good morning.
What are they going to do? They're going to keep it there until they get a deal here to bring it back over, and whatever that repatriation is going to be, whatever they're going to get, they're going to bring it back here and probably put it to work here.
Now, the dream, of course, is that they bring it here and they put a lot of it toward building factories and creating jobs instead of continuing to buy back stock. Do you think they're right now I think they're up to $210 billion they're looking to buy back. You think they start to shift the gears a little bit and say, hey, how about doing something in America to help the economic growth?
I would hope so. I would hope that they would actually assemble their phones here, because they could do that for $50 more per phone. And I think that Americans would be happy to pay that extra $50, because most of the time the cell phones companies pick up it anyways. But if the assembling of the parts is $50 more per phone if you did it in the United States of America, that would create jobs, that would create the velocity of money, that would change the whole dynamics of what we're doing right here.
You know, Liz, I mean, Lee Iacocca, he promoted the Buy America thing very successfully, saving Chrysler, and it's been done all throughout history. Could it be done again? Could Apple say, okay, we're going to bring back these jobs, we're going to build factories, we're going to put people to work, and the American public is going to cost a little bit more, so you have to step up to the plate as well.
Tim Cook famously said late last year, I think in August, the Washington Post, there's nothing patriotic about paying more in taxes. So he's saying they've got to
get... removed the taxes, though.
Yeah, but listen, we're not even anywhere near tax cuts right now. I mean, the president is talking about Dodd-Frank reform and bringing back Glass-Steagall. I mean, the disarray right now, it doesn't seem there's enough focus to do tax reform. We ain't going to see that money coming back soon. It sounds great in theory. In practice, I don't see it happening anytime soon.
Yeah, and we should point out to the audience that we are the only industrialized nation in the world that taxes companies for making profits overseas. Every other country lets them bring that money back, Shaw, and then naturally some of it will go into development, domestic development.
Well, this is a staggering amount of cash that they have at $256 billion. It's actually, we use these numbers, we throw them around all the time. We don't realize the magnitude of that number. That is more than the foreign currency reserves of the United Kingdom and Canada combined.
Can I give you another
stat? It's a tremendous amount of money.
With the exception of 61 countries, it is bigger than the GDP of all the rest of those, the majority of the countries in this world.
Yeah,
but it keeps the country open for a month.
Well, I tell you what, that's another discussion on government spending. Okay, don't get me started on that. Instead, I want to talk about
interest costs.
Let's talk about Facebook, right? Because when you talk about Apple, you think about Facebook, and they reported after the bell, the stock just hitting an all-time high. Shaw, you still like it at this level?
I mean, how can you not like it at this level? I mean, all the leadership stocks, the technology stocks are doing so well. They've got momentum behind them. They've got the positive earnings and momentum in the earnings growth also. So all of those stocks are must-have, must-hold stocks.
Todd?
No. Facebook, great company, a phenomenal, great job. But this reminds me a lot of the 90s, Charles. You know, we're due at some point. We're going to have a little bit of a beatdown. Now, long term, if you're an investor, it shouldn't bother you, because it's going to come back and the market's going to work their way.
So in other words, if this is in your 401k, you wouldn't sell the stock.
I would not. I don't sell it if I own it. But I'm not going to sit here and now step in at 153 and buy it, especially with the move it's had into earnings. Even if they beat on earnings, does the stock have enough juice to continue to run higher? That's my issue here. I'm not a seller. As an investor, I think you just sit back and wait. You let it go.
To Todd's point, it's a great point. People basically like Facebook to stay in touch with their family and friends, but the problem is user traffic, or user time spent could be starting to trend down because people have negative experiences on Facebook. They don't feel good when they're on it, and you watch the scientists looking at it, they're saying, Facebook may have a problem here.
But they're expecting perhaps a 40% increase in net. So I mean, something like that
is 46% in net and sales.
Right, that's fantastic. How can you not own a stock like that? And Todd, I would disagree with you in the sense that I wouldn't necessarily buy it here, but if I was looking for some place to put money in, it would be any one of these big tech stocks.
Well, one thing we do know is that the winners typically continue to be winners for a very long period of time. Right. And playing the guessing game on when they're going to crash has cost a lot of shorts money this year. By the way, on that note, Tesla, the shorts have lost $3.7 billion on Tesla, and they report too after the bell. Let's check on the opening on the big board here. You can see Dow off 35 points. You did have higher profits at Yum Brands, strong demand at Taco Bell's. It's that new hot taco, really good. Also higher sales at Clorox, but the stock, as you can see, moving slightly lower. In the movies, well, it was Kong Skull Island. Isn't that the one you told me to see, Matt?
Oh, yeah, I love it. Love
And the
Big
Lego
Time.
Batman movie.
Fantastic.
I know everyone saw that. That's helping Time Warner and their profits. That stock fractionally higher. And shares of the New York Times, they actually had a profit this morning versus a loss a year ago. You know what? Fake news sells in any environment. Just
They can
joking.
thank Donald
All right,
Trump.
guys. Hey, higher profit also at Humana. In fact, they added members in its Medicaid Advantage business. That stock doing extremely well this morning. So here's the thing, though. From Humana to Aetna, more and more pulling back from Obamacare exchanges. And Shaw, are you surprised? And what does it all mean, particularly for Obamacare?
No, I'm not surprised at all. I mean, I think we've known for a long time that the ACA has been problematic in terms of the exchanges, how they're structured, and these healthcare providers leaving the exchanges. I think Aetna's down to maybe 4. And I think in 16 they were participants in 16 exchanges. They're down to 4, and I think they're going to cut the rest of those out. So fortunately for the states that they're in, there are other providers. They may be pulling out too. There's nothing but a problem.
You know what really is terrible
It's
about
going
this
to get worse.
backstory? That certain states or localities are threatening to raise property taxes to fund the exchanges if it continues to go in the downward spiral.
Right, and of course the administration has to decide whether or not they want to continue funding, and they keep dangling that as a potential deal breaker, whether it's the budget or some other sort of legislation.
It'd be nice if we would just go back to real free markets and let everybody compete in the same market, and then you might have a little bit different story here. You have this only one provider in this country, in this city, in this state. You have only 2. There's no real true free market. There's no real price discovery anymore, and that's, I think,
Todd,
a bigger
I think it's
problem.
unintended consequences. Some people believe that President Obama, though, that they actually orchestrated all of this to ultimately end up with single payer. I don't think that they were that sort of mad genius.
No.
I think they took a socialist view of this, a socialist crack at it, and we got what typically happens when you do that. But is it possible that we can end up with some sort of single payer?
Under the current administration, I think not. Okay, but I think that was, I don't know that they planned it that way, but I think that's the direction. If you watch the way all the money flow goes and all the different programs that we have, it is trying to guide everything into almost a welfare type of state. And I think that's a bigger problem.
This is, I don't think a lot of people know, but at this very moment, the Atlanta Fed is predicting that the quarter we're in right now, growth is going to be above 4%.
Yeah.
Todd, what is that possible?
No.
No, you don't see it?
The only possibility is if there's a gigantic soybean or grain deal that goes to China again, as it did in the fourth quarter, which was a fact that the reason we had 3% in the fourth. Where are we going to get the growth from? Where did it magically appear from? We're not making more money. We're not seeing real new development. We've got full employment of lousy jobs. So where are we going to grow to?
But there is wage pressure, so we might actually start to see some authentic wage gains.
I hope so.
And we might actually see those wages making it into the economy. What do you think, Mac?
Well, consumer confidence is still hanging in pretty solid. I hear your point that there are weird quirks of numbers that pop it up, but the Atlanta Fed has been really dismal in its forecast. So for them to now say this, what a 180,
you
right?
You could take off Atlanta and just...
Although I think they're pretty good when it comes to direction. They never get the exact number, but the direction.
But Mnuchin says 3%.
But they were pretty good in the first quarter. They predicted a 0.5% GDP growth in the first quarter when everyone else was around 3%. So they hit it pretty well on the head there.
Yeah.
And of course, we got a long way to go anyway. By the way, guys, I want you to take a look at this stock, Arch Coal. I keep saying keep an eye on middle American blue-collar jobs in industries like coal, steel, railroads. Arch Coal was a huge winner yesterday, along with some others. Shaw, I'm seeing traction here, and I think these are the names. They're not glamorous, but these are the names that are Americana.
I know you like these stocks and like this group, but I think they're going to have a great deal of difficulty unless we get more deregulation and I guess we get some stuff out of the administration. I think these stocks are going to kind of just flounder a bit.
Todd, I do agree that part of it, and they all say that, hey, they anticipate regulatory help will continue the business, but thermal coal is up. Metallurgical coals is through the roof. I haven't been to a city in the last 2 years that, so many cranes, it looks like dinosaurs are running around. I mean, we've got some major building going on in this country already, and if we can add infrastructure to that, it might not be too bad.
No, and I agree, and I think that you might see some help here. I think one of the biggest problems we had is that when they eliminated the use of coal, they put them out of business so fast. Now we're just trying to bring them back and at least allow these people to get work and get through it, and that will be the
Absolutely.
energy.
All right, well, thanks a lot. I want to say thanks to Todd. Thanks to Shaw. You guys were absolutely fantastic. And